All right. Hey, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays. Today is a crazy important day, and we're going to be here live to see the carnage, the potential carnage in the markets. Now, I am being super optimistic, thinking that the Fed will only raise the interest rate by 50 basis points, therefore creating a bit of a rally in the market. Let's go to the charts. Well, let's go to screen share, not even the charts. And I want to show you guys where we're going to be watching this announcement. We're going to watch it live on Bloomberg, which you can watch for free. Just go to bloomberg.com/live/US. If you are in the US, if you're not in the US, I'm sure you have one of these in your local language. So let's check the audio. I'm going to turn the audio on. You guys let me know if you can hear, and I will keep an eye on that as myself. Let's see.
Yield in 5 days moved 70 basis points. The S&P 500 in 5 days moved more than 10% in the other direction. Brutal moves over the last week coming into this one.
And today, people perhaps are saying that we've priced in a 75 basis point hike.
All right, can you guys hear that?
The Fed will throw at this market. If that holds,
all right,
then
perfect.
perhaps we could create some bottom. But the pace of these moves just.
All right, I'm going to pause that. I'm also going to come off of that. I don't want to get banned. Of all the things I would get banned by YouTube for, I really don't want it to be streaming the free version of Bloomberg from Bloomberg's website, right? So we are gonna keep that window to a bit of a minimum. I should probably grab that and put it on my other monitor so that I can keep an eye on that. So let me do that so that at least I can kind of keep an eye on it, but not share it live with people. Also, the moment I turned it on, there was an interesting headline about Ukraine. Basically, US is saying that the areas of Ukraine that are under, debate should be Ukraine's problem and not US problem. That was literally the headline below the video, the economic video on Bloomberg. If I see that come up again, I'll probably put that up there and show you guys something that I've been saying for a long time. Okay. All right, we got 600 live viewers or close to it. We're also keeping an eye on Bloomberg.com. And let's go to the charts. Yeah, everyone is now expecting 0.75 basis points. Well, not 0.75, sorry, 75 basis points, which is 0.75%. That's what everyone continues to expect. I still expect 50 basis points. Maybe I'm being naive. We put out a Twitter poll. Guys, this is a Twitter poll from the Financial Summit. I already retweeted it. I already voted. You can see how I voted. This is my Twitter account. I voted. I still think it's going to be 50. 62% of you think it's going to be 75. A few people have commented that it's going to be over 100 basis points. Go ahead and participate in our poll. I'm really curious where this is over the next 45 minutes. And also, since you're here, give us a like, give us a subscribe. We're on a mission to get to 1,000 followers on Twitter, and it looks like Twitter is going to make it faster to 1,000 over our Instagram page. Our Instagram page is super cool. It's got videos from our prior events, so check that out as well. All right. Bitcoin price. Bitcoin has still been avoiding the drop below 20,000. We have more carnage happening in the world of scammy shitcoins with one of the, what was it, 3 something. What was that? What was that hedge fund out of Dubai? 3 Aces, was it? I don't remember, 3 something. They were fully invested in DeFi scams and all other nonsense. Now, we're going to see a lot more of that. This is why you shouldn't shitcoin, kids. 3 arrows, thank you. It was 3 arrows capital. And we're going to see a lot more of that as Seyfedin says, play stupid games, win stupid prizes. And we're seeing carnage in the world of shitcoins. If you are holding Bitcoin, you will be fine. 1 Bitcoin will always equal 1 Bitcoin. We have been here before. We have been here many times. If you've watched my channels long enough, I have been with you through 3.5 bear markets. The one in 2013, the one in 2018, the carnage of COVID shutdowns of 2020, that's the half of a bear market. And the current one, and I still plan to be with you guys as we get out of this disaster and resume the eventual bull run to 100,000 and beyond. Okay. Now we're also hearing lots of chatter about where liquidations are. Apparently Celsius has lowered their liquidation point to 14,000. I don't really want to, like, as much as I would like, as much as I wouldn't mind, let me use proper language here. As much as I would not mind Celsius getting fully liquidated and that company, you know, removing itself from existence, because it's been a horrendous plague on, you know, an honest, well, Bitcoin world. I don't really want to see 100,000 Bitcoin get sold at $14,000 a coin. Now, one of the better ways to play that is to just set up a bunch of limit orders on your exchanges. Not trading advice, but hey, throwing in a huge buy order at like 12,000, something to consider. By huge, I mean relatively huge. Don't go with high leverage. Remember, if you're not leveraged, you should never ever get wrecked in any position, including a Bitcoin position. I think Sailor is perfectly safe. His liquidation point is way lower, but Celsius could be a serious problem. All right, let's go to the shorter time frames. Looks like a data error again on the weekly chart. From TradingView, we are clearly within the same week. Well, naturally, something's wrong here. If that's the week of June 6th, yeah, we should be in the following week now. So it's a weird chart to look at. Clearly, we didn't start up there. And we are below the long-term moving average. It's okay to be sitting in this position for a short amount of time, anywhere between a few days to maybe a week, maybe 10 days. And after that, if we rebound from there, then everything's fine. Hey guys. Looking at your live chat. Tone hit refresh. No, I did hit refresh. Doesn't help. Let's reload. It didn't help before. Let's see if it helps now. Nah, see, it doesn't help. Reloaded the whole page. It's a data error. Okay, 4-day allocation chart. Staying patient here. Staying patient. I am still a believer. I still think we're going to have a 50 basis point rise and the stock market will rally. The stock market will rally. Also, the following tweet, guys, we tweeted out the paper from the Financial Summit handle. That's the paper that shows you the best day to be long the stock market is today, historically and statistically. The data for this paper was 20 years worth of data from 1994 to 2013. And in that data shows that you have almost 0.5% gain on average. So if the market has crashed at some point this year on this day, then it probably will make up for that with at least a 1% gain at some point. So this has been historically a good day. I have paid attention to this, though I haven't kept track of the data. Maybe I will. Maybe I'll go back through every single Fed day and see how stocks performed on this day historically. I'm so used to assuming that the stock market will rise on this day. It does most of the time, even now, 10 years since this paper was written. So let's take a look at this correlation between the stock market and Bitcoin. Now you can see this correlation continues on very significant basis. I tried to line these up as best I can. You can see how the stock market has made a high right here at 10 a.m. Eastern time. Oh, today we get the 10 a.m. reversal, huh? Today we get the 10 a.m. reversal. We didn't get it yesterday, but look at it today. We were watching, I was streaming yesterday through 10 a.m. I was waiting for the 10 a.m. reversal. It didn't happen. This purple line represents the opening of the market. And you can see how we absolutely perfectly reversed at 10 a.m. Yesterday, I made it very clear I was not going to trade the 10 a.m. reversal because of the way it was shaping out. It reversed at 9:45. I don't trade at 9:45. I used to be a day trader of S&P futures, and I used to trade the 10 a.m. reversal. Today, I would have crushed it because today you had the perfect 10 a.m. reversal at about 10:01, 10:02. I'm sorry, the market topped at the end of this 10-minute candle. So around 10:08, that is still a 10 a.m. reversal. That is a 10-minute candle off of 10 a.m. And from that moment, the market fell a full 1 percentage point for 30 points. Back in the day when I was trading this, you would never get a 30-point move in a single day. The markets were never this volatile. You would pray for a 10-point move. Now you get these 20, 30-point moves like on a daily basis. That's also because the stock market is more than double the value of what it was back when I was trading it for this strategy. So back when we were hoping for a 10-point move, that would be equivalent of a 20 move today. But we're getting 30-point moves virtually several times a week. You can see Bitcoin also topped right at 10 a.m. Eastern. Exactly the same thing. Technically, Bitcoin topped at 9:50. It topped 10 minutes earlier. It kind of goes to show that Bitcoin reacts a little bit faster than the traditional market. They both bottomed around 11:20. You can see Bitcoin bottomed at 10:50 a little bit earlier. Then we rose up. Where did Bitcoin top? Bitcoin topped at exactly noon, at the noon 10-minute candle. When did S&P top? Well, how about that? S&P topped at 12:30. So throughout today's trading day, Bitcoin has been turning ahead of the market. Now, what about the bottom? Well, the bottom came in Bitcoin right here. There was a little bit of a wick, but the bottom close came at 1,300. And here we are, the S&P 1250, a little bit earlier, because now it's crunch time. Now we're getting too close to the Fed announcement, and now the S&P is going to take over. This is going to be huge. I can't wait. We are 30 minutes away. We got a countdown clock going. FOMC rate decision at 2 p.m. They're saying 2 p.m. I really thought it was 2:15. It might be 2 p.m. So either way, at 2 p.m., we're going to be watching. Really thought it was 2:15. Maybe they go live and talk about it at 2:15, but they're going to announce it potentially at 2. Either way, we're going to turn on Bloomberg and we're going to listen in. All right, let's take a look at the other charts. Also, before I forget, guys, come join us at the Financial Summit in the Dominican Republic. We are less than 6 weeks away from this awesome event. Rented this entire castle, and I can't wait to just share knowledge on trading, investing, finance, all kinds of investing opportunities, probably less so in the DeFi space this time than we had at the Dubai event, the last one we had. So come and join us, read more about it on the website, check out our YouTube channel on the Financial Summit. Still trying to get to 1,000 subscribers there so that it no longer displays any ads. Long way to go on that one. And vote in our poll. Please vote in our poll. I would love to see 1,000 votes. Let's see. Let's refresh this. Right, did we get 1,000 votes? I still think it's going to be 50 basis points. Am I going to be wrong? Well, Tone's always wrong. We're at 570 votes. Let's get a real poll going, guys. I'll go back to the charts. Let's see 1,000 votes. We got 900 people watching. Like, retweet. Let's get 1,000 votes going. All right, almost at 1,000 viewers too. Beautiful. And check out this paper. It's a really good paper. Man, I found this paper back in like 2014 or something, and really should have taken better advantage of it. Anything above 0.75 basis points, expect markets to crash. Well, I think markets are not going to be happy with 75 either. Rally if less than 75 basis points. I agree. And I think it's going to be less than 75 basis points. I think it's going to be 50 basis points. And because of that, I do think the markets are going to rally. SUV, I agree with you, brother. I agree with you. All right, we got some moderators. They're sending me questions. Tone, can you please tell us your chances for bottom price points with percentages? I remember you did that for the 2018 bear market, and it was sticky to Twitter. Okay, cool. Tone, if Tesla sells their Bitcoin, when do they have to disclose it? On their following quarterly report. Have to wait for earnings report. That's correct. You have to wait for the next earnings report. Yeah, everyone is now convinced there will be 75 basis points. We're at 600 votes, guys. Come on, jump on Twitter. It's all right. I won't hold you to it. Let's go to the daily chart. See, the daily chart, I would love to, in a way, I would love to wait for Bitcoin to give me an MRI buy. I will be absolutely buying this next MRI buy. That would be the perfect MRI buy. If we go down for a few more days, just a few more days, we will catch an MRI buy. If real capitulation comes, if we get these liquidations, if we get some of these companies completely blown up and they have to sell all their shitcoins and Bitcoin, hopefully they're selling their shitcoins for Bitcoin. Look, if you're capitulating from your shitcoin bag, you really want to consider capitulating into Bitcoin. Yeah, this is a really huge rate announcement. It's one of the biggest ones that I remember. It's one of the important ones. Remember, last time they surprised the market with a 50 basis point increase when people thought it would only be 25. So I think they're going to go under this time. Lynn Alden, ECB emergency meeting tweet. Interesting. Let's go and take a look. We are fans of Lynn Alden's work. So let's see. Not sure where it would be. Oh, here it is. The ECB had an emergency meeting today and announced a new tool to address Southern European debt problems. Really? That's interesting, considering they created those problems to begin with. Well, that doesn't really tell us what it is yet. Very interesting. All right, let's get back to our poll. Really hoping for 1,000 votes. Why did it just drop to 600 votes? Twitter, what are you doing? You have 1,000 employees. Like somebody tweeted, what the hell do you people do all day? How does my poll have 640 votes and then drop to 600? You guys saw that, right? It's not the 2020 election anymore. You can leave the votes. This is not that serious. Yeah, 300 week moving average. On a weekly, I'm assuming. Okay, let's add that in. I just want a regular moving average. Length, 300. Yeah, so the reason why people asked for this is because right here, we pretty much hit the 300 moving average, but that's the only time we've ever touched it. So I don't really see, I mean, you can kind of leave it. I don't believe in a trend of one. And I also have an MRI line right there. So next week, this thing's probably going to move up. So if we hit it, we hit it. But I don't really pay attention to the 300 week moving average all that much. All right, we are 5 minutes away from 2 o'clock. In a few minutes, we're going to fire up Bloomberg and take a look. Well, the poll numbers are not going to change. They're going to stay this way. It's pretty much solidified. That's actually the beauty of these polls. Once you do get, you know, 500-600, once about 20% of the votes come in from the maximum number of votes that you'll get, the results won't change, especially when they're this lopsided. So no matter how many people vote going forward, it will stay this way. But it's interesting what will happen after they announce. Like if they actually announce a 50 basis point rise, you'll see this skyrocket because everyone's going to be right, you know, after the fact. Oh, I knew that it was 50. Same thing for 25. Tone, why did you delete your 20% loss better show occasion that you made on the 2nd of February? I did not expect that from you. I'm not sure what you mean. I did not delete anything as far as I know, at least not on purpose. So I'm not following you there. You may have to be a lot more specific. 2022 is February 2022, which is I'm confused. I don't know what you mean. But yeah, I have no idea. If I did delete something, it wasn't on purpose. So if you prove to me that I did it, I'll put it back. Like as far as I know, I didn't delete anything. Okay, we got 3 minutes. 50 basis points will cause a market sell-off. I don't think so. I believe 50 basis points will cause a market rise. 100 basis points will cause a major market sell-off, and 75 basis points might just be the status quo. And also, I am keeping an eye on the following pattern. Will the market dip immediately following the announcement, followed by a rise? This is 20 years worth of data of days like today. And this is how the stock market has performed on average across those 20 years of 8 days a year. And in my experience, it stayed this way over the last 10 years as well, because this data is only up to 2013. I really want to take a month and like compile this data myself. So we will see how that goes. All right, let's pull up Bloomberg. Bloomberg time. And then we'll look at the market. This is my market. Yep. Oh, it's already moved. Did they announce yet? Let's turn the volume on.
For you, we have terminal rate between 3.5% and 4%. But what they would do to shock the market and would cause us to rethink our baseline forecasts is, again, if they're thinking about this in real inflation-adjusted terms.
Because it would mean it had to get more aggressive at the end of the day.
Exactly.
You can't make that adjustment yet because it had a signal being that aggressive.
Exactly.
So they don't have to hike 100 basis points for it to shock the market. They can just talk about.
Wow, they're talking about 100 basis
Exactly.
points.
It's all about how they're framing it. And as we were just discussing, really the market's already forecasting and pricing 75 basis points this week, 75 basis points in July. So the shock to the market is really going to come more from
Look at Bitcoin.
thinking about the terminal rate rather than what just kind of the very near term.
Guys, I'm expecting I said I'm expecting a rally.
In terms of which talk about the sort of demand destruction and ultimately whether or not the Fed is going to have to deliver that. And judging by what you said, they probably will have to. What does that do to the labor market?
Yeah, and right now that is something that the Fed has in their mind. We see this to some extent from their communication around the FOMC minutes. Right now, though, they're very much so focused on the inflation side of the mandate. And they actually do need to see a cooling in labor. They need to see a cooling in job creation to really cause this cooling in demand and cool the more cyclical components of inflation. So to some degree, taming inflationary pressures needs to come at the cost of a weaker labor market.
So part of that also is what part of the market is the Fed going to be watching? We know the Fed put in the equity market, that's dead.
Yes.
They want higher.
Oh, wait,
bond
should I
market,
go to
that's dead.
this?
What about the credit market?
Is this a different link? Oh, wow, I reached my free live TV limit. Huh. I didn't know that was happening. Really? Oh, that sucks. So what the hell am I watching? What's the decision then? That was a total fail. So is this live TV or not?
Our call is for a 50 basis point rate hike tomorrow. We are, though, of course, flagging this potential for a
75.
And really, that comes in the backdrop of a very, very strong CPI print.
We got 75. So this isn't even live. Okay, no wonder it moved. Right, so there it is. So we got the 75. The markets are going buck wild. I expected 50, but let's see how the market reacts. 75 did become the expectation. So let's see how the market reacts. The initial move in the market. The initial move in the market was up. Let's go to a lower level time frame. 1 minute. Here's the 1 minute candle, ironically, at MRI sell. I owe somebody a steak dinner too. I really thought it was going to be 50. All right, so they're going to speak at 2:15. Let's see what they say. The market is handling this fairly well. Remember, we are still up on the day. Even at 75 basis points, the initial reaction was to the upside, then the downside. And now we are handling this fairly well. We are on the 3rd minute of the announcement. But let's see how today ends. Oh, that's not a good candle. No, 50 would have made sense. 50 would have made more sense than 75 because people still think the Fed can actually fight inflation when in reality it can't. So the Fed can only do what's best for the market and jobs. So not to crash the stock market is the best the Fed can do. Gold's not doing anything. It's totally irrelevant. All right, well, we're just watching. Bitcoin is actually holding up well because the S&P is at a new daily low, but Bitcoin has held up. Oh, wait, maybe the S&P is not a new daily low. I'm looking at a 1-minute candle. No, it is. It's at a new daily low. Powell is going to get interviewed in 30 minutes. Oh, and there goes Mr. Market. There goes Mr. Market. Let's see what the Fed says. Do you think Alex Mashinsky will be arrested? It depends on what he does. As long as he didn't, directly scam anyone, probably not, because the SEC was dumb enough to give Celsius a seal of approval. So as long as Mashinsky didn't, do anything illegal with the funds, then I don't think he will be arrested. No. BTC going below 20. Not yet. Not yet. So right now, we are sitting, if we go back to that chart, excuse me, guys. If we go back to this chart, right, the Fed announces, we drop into, like, I can't really draw on this. Maybe I can. Hold on. Can I draw on this? If I hold control, no. Shift. Around 230. So the Fed announces, and then around 230 is where the bottom tends to be. But the stock market usually rises into that level, then it drops, and then around 230, I don't know if you guys saw yeah, you did see my drawing. So right here, this circle here is around 230, 220, 230. I can swear they used to announce at 215. Oh, well. So let's see if the market still reverses. Let's see if we follow the traditional path. All right, so how many votes do we have? Damn, we still haven't broken 1,000 votes. All right. Well, you guys were right. I was wrong. You guys were right. I was too hopeful. One second. Yep, press conference 2:30. All right, let's go back to the price. See what's going on. Whoa. Okay, well, we're still in line for a potential reversal around 4:30 or 4:15-ish. Bitcoin is, of course, also taking a nosedive. Bitcoin has still not yet gone below $20,000. Not even for one tick on the average. On the average, it might have done it on some exchanges, but on the average, it has not yet broken this low. If it breaks this low, then yeah, 20,000 is sitting right here. That's 20,000. Bitcoin is holding up. We have an MRI buy on a 1-minute chart. We are rallying right now in the stock market. That should help Bitcoin. Guys, we are following so far this path of what happens after the announcement. We did not follow necessarily this path, but from market open into the market top, right? So here is the top before the announcement from market open. On average, that's about 0.25% rise in the stock market. If we go to the stock market, I should put Twitter right next to it. If we go to the stock market, the purple line represents where the market opened this morning. We opened this morning right there as the 9:30 opening candle. So technically speaking, right before the dump of the announcement, I'm not going to cherry pick the intermittent top. I'm just going to go to the 1-minute candle. We were up, 0.3%. We were up 0.3 percentage points at the moment of the announcement. The moment of the announcement, we were up 0.3 percentage points on a 1-minute closing basis, which is actually in line with this statistical probability, because from this zero up until here is 0.5%. So this is a little more than half that. So that's about 0.3%. So we were exactly where we were supposed to be at this moment, at 0.3% higher than opening of the trading day. And now we dumped after the announcement. And let's see if we go and make a new daily high after the announcement, because that is the historical move in the S&P 500. And let's see if Bitcoin drags along for the ride. Well, Bitcoin is not, but the S&P is, turning. This might be that low. We don't know yet, of course. Powell is going to speak in about 20 minutes. Where can I listen to this? Where can we listen to it? Watch Jerome Powell speak live. Okay, yeah, I can watch it from the Fed. Beautiful. The Fed will stream it. So let's do that. Let's go watch that. All right, watch live. Let's see what happens. Okay. We will watch and listen live. Now, if the stock market does follow historical trends and rises to new highs, this should help Bitcoin significantly. This is a 1-minute chart, guys. Let's see what happens. Bitcoin's on a 10-minute chart. We're watching the break of potentially the break of 20,000. Can I take a look at Ethereum? Only if it's dying. Yeah, I know I can use a VPN, but I wasn't gonna mess around with that right now. Oh, stock market's moving. It's moving. What was I gonna do? Oh, Ethereum. The US dollar is rising. We had a really good discussion about this last night in Spaces. Guys, I strongly recommend you go and listen to Spaces last night. On my channel. So if you go to my channel, Mark Moss had some awesome things to say in yesterday's Spaces. It was like around midnight East Coast time. So right here, this one. Mark did a great job. It was a 2.5-hour Spaces. Mark was there for like the last hour of that. So try to catch Mark Moss towards the end. It's awesome. I still think the Fed should have raised it 50 basis points and then threatened to raise it 75 or 100 in July. I mean, look, the next announcement is only 6 weeks away. It's around the same time as the financial summit. So there was no real reason to raise it 0.75 basis points right now. They're not going to alter inflation. It's not going to change. Made no sense to me. All right, let's see if the market rallies here. So far, it has played out exactly as expected. You can see it here. I tweeted it out, retweeted it anyway. Right here, the FOMC drift. So far, it has played out perfectly. We dropped right after the announcement and then rallied. Back to the chart. Oh yeah, Ethereum chart. Well, let's go back to the regular chart first. Oh, there it is. All right, we rallied pretty much off the one. Look, we top on a 1-minute MRI sell. We turn around pretty much on a 1-minute MRI buy, and now we have a 1-minute MRI sell. The markets are rallying. The markets are back to break even for the day. This is interesting, but until he opens his mouth and starts talking, this could all turn around in a hurry. So what am I looking for now? I'm looking for a 1 to 4 candle correction and a slowdown. And Everyone waiting for Powell to start speaking in 10 minutes. When would you consider going all in on Bitcoin? Who says I'm not already all in? Like now is as good a time as any, I think. It can still fall down to 10,000, but don't wait. We've made this mistake in the last bear market. What's your definition of a rally? Well, we just moved pretty nicely, didn't we? I mean, the S&P just moved a full percentage point following the playbook of the Fed, what the Fed wrote 10 years ago of what the stock market does on this day. We go up, we crash right after the announcement a little bit, and then we hit a new daily high and then close the day at a nice positive level. So let's see where we end the day. One second. I got to check on something. Do I believe in a 4-year cycle theory of Bitcoin? Yeah, I believe we get a bull market and a bear market within a 4-year period all the time, plus the halving. Yes, I believe it, but I don't believe you can time it. All right. Back to the charts. Oh, that's a good sign. We are back to break even. That's a green star candle following an MRI top. What did I say? 1 to 4 candle correction and then more upside. You are seeing that now. We do need that green star candle to remain, solidify, and then break the top of these candles. I think we can do it. So let's see if this green arrow is going to materialize by end of day. If it does, that would save Bitcoin from going below $20,000. And then we take it from there. JP Morgan believes that stocks will rally on the 75 basis point rise news. Well, we're watching it, right? It doesn't matter what they believe or not. We're witnessing it in real time. Thank you for your super chat, unnamed person. Hey, Tone, huge fan of yours. What is your play when the 20% bullish allocation? Also, do we place a short if Bitcoin dips below 20K? No, absolutely not. The time to short Bitcoin is over. The time to short, the last time to short Bitcoin should have been the break of 29,000. I would not be looking at any shorts right now. Oh, there it goes. Full reversal. Green star didn't solidify. Could not get to break even. Full reversal down. Went from MRI sell to MRI buy to MRI sell. I really thought this would be a 1 to 4 candle correction, then up. Turned out to be a 4 candle correction and then further down. This current candle has solidified that move. So now we need to avoid the break of the prior swing low. Also, once Powell starts speaking, everything changes because the market will just react to every syllable he says. Do you think we'll bounce off of 20K? That's the wrong question, because we've already bounced off of 20K. Do I think we'll bounce off of 20K again? I don't. So either we have already bounced or we go lower. The question of do you think we will bounce is a incorrect question. Do you think we have bounced off of the 20K is the right question. And so far, I still believe that we have. But I don't think we're going to bounce off of it again. I think if we get down to 20K, we're going lower. Why are people's messages being deleted? I don't know, either my moderators or YouTube. YouTube deletes a lot of messages. They don't even let them go through. Yeah, no, I got the Fed video all queued up. All right, let's look at Ethereum for a minute. The US dollar continues to rise. I don't think this had much of an effect on the US dollar. Let's take a look. Let's go to the 1 hour chart of the US dollar. Oh, that's not the US dollar, it's JPY. Let's go to the 1 hour chart of the US dollar. Let's see what happened. The US dollar likes this news. It also had lots of volatility today, but this is the 1 hour chart. And the 1 hour chart hit a new generational high. Let's go to the daily chart. When was the last time the dollar was this strong? The last time the dollar was this strong was in 2002. That is a generational high. To me, a generation is like 20, 25 years. Maybe it's more like 30 years. What's my target if 20K is broken? 18, 17 and a half, 18. All right, we're still following this playbook. Let's see if this materializes into end of day. Though I don't think I'll be streaming here until 4 p.m. We do have 1,300 viewers. I'm sure there's good Twitter Spaces is going on right now too on this topic. I'm actually going to check. Yeah, FOMC live Fed hikes, 2,500 people. Also, toxic happy hour going on right now every day at 2 p.m. Eastern time. That one has about 200 people. We have 1,300 live viewers. So far, so good. We've made a higher low. That is good. If we start rallying again into the Fed video, that could be a good sign. Let's see what happens. Ethereum. I keep trying to get to Ethereum. Shitcoins. Ethereum is still in a pretty bullish posture on a longer term scale. On a monthly chart, Ethereum is still not even at this trend line. This is the supporting bullish trend line for Ethereum versus Bitcoin, and it hasn't even gotten there yet. Now, once Ethereum breaks this support of the trend line, then Ethereum gets into serious trouble. But as long as it stays above this trend line, Ethereum on a longer term scale is still a bullish looking chart versus Bitcoin. There's nothing I can say about that. I'm hoping it never goes above this high again. So we can also say that this is a big problem for Ethereum on a long-term picture. And this triangle is more likely to resolve to the downside because Ethereum is a horrendous plague on the world. So this is what's more likely to happen, but it could take a while. Yeah, thank you for watching, guys. Thank you for the support. Like, share, subscribe. Please follow the Financial Summit Twitter handle. Did we finally get 1,000 replies? 1,000 votes? No, still stuck under 800. But it's too late now. It's been announced. I did tweet this out 1 hour before the announcement, so it's all good. Yep, there it is. Fed rate hikes, 75 basis points. So the question is, will this have a bearish effect on the market going forward? Please leave your comments below this tweet whether you think it will have a bearish effect on the market going forward. All right, 1 minute to go. 1 minute. How do I watch this and also keep the chart up at the same time? I'm gonna change my screen share around. Let me close some stuff before shit gets doxed. I think we're okay. I'm gonna do a different kind of screen share. I'm gonna do my entire screen share. And now what I'm gonna do is I'm gonna move these to the side, like yay. And we're gonna keep Bitcoin at 10 minutes. And then what we're gonna do is I'm gonna grab this. Oh, that's not very useful, is it? What's going on here? There we go. And I wonder if I can pull this out. Nope, not what I wanted to get to. All right, where's the audio? There we go. Let's listen in.
Good afternoon. I will begin with one overarching message.
Shoot.
We
Where
at
to
the
go?
Fed understand the hardship that high inflation is causing. We're strongly committed to bringing inflation back down, and we're moving expeditiously to do so. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses.
All right, let's see what the market
The
does.
economy and the country have been through a lot over the past 2.5 years and have proved resilient.
Hope you guys can
It's
hear.
essential that we bring inflation down if we are to have a sustained period of strong labor market conditions that benefit all. From the standpoint of our congressional mandate to promote maximum employment and price stability, the current picture is plain to see. The labor market is extremely tight and inflation is much too high. Against this backdrop, today the Federal Open Market Committee raised its policy interest rate by 0.75 percentage point and anticipates that ongoing increases in that rate will be appropriate. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. Against this backdrop, today, overall economic activity edged down in the first quarter as unusually sharp swings in inventories and net exports more than offset continued strong underlying demand. Recent indicators suggest that real GDP growth has picked up this quarter, with consumption spending remaining strong. In contrast, growth in business fixed investment appears to be slowing, and activity in the housing sector looks to be softening, in part reflecting higher mortgage rates. The
Oh
tightening
boy, I
of
gotta
financial
adjust my
we've
chart.
seen in recent months should continue to
Oh
temper
boy.
growth and help bring demand into better balance with supply. As shown in our summary of economic projections, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth running below 2% through 2024. The labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies at historical highs, and wage growth elevated. Over the past 3 months, employment rose by an average of 408,000 jobs per month, down from the average pace seen earlier in the year, but still robust. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, while labor supply remains subdued, with the labor force participation rate little changed since January. FOMC participants expect supply and demand conditions in the labor market to come into better balance, easing the upward pressures on wages and prices. The median projection in the SEP for the unemployment rate rises somewhat over the next few years, moving from 3.7% at the end of this year to 4.1% in 2024.
I have no idea how they know
levels that are
that.
noticeably above the March projections. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in April, total PCE prices rose 6.3%, excluding the volatile food and energy categories. Core prices rose 4.9%. In May, the 12-month change.
Nobody cares about core prices. Food and energy is the only thing people actually care about.
And the change in the core CPI was 6%. Aggregate demand is strong. Supply constraints have been larger and long-lasting than anticipated, and price pressures have spread to a broad range of goods and services. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is boosting prices for gasoline and food, and is creating additional upward pressure on inflation. And COVID-related lockdowns in China are likely to exacerbate supply chain disruptions. FOMC participants have revised up their projections for inflation this year, particularly for total PCE inflation, given developments in food and energy prices. The median projection is 5.2% this year and falls to 2.6% next year and 2.2% in 2024. Participants continue to see risks to inflation as weighted to the upside. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Against the backdrop of the rapidly evolving economic environment, our policy has been adapting, and it will continue to do so. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 percentage point, resulting in a 1.5 percentage point increase in the target range so far this year. The committee reiterated that it anticipates that ongoing increases in the target range will be appropriate. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Coming out of our last meeting in May, there was a broad sense on the committee that a 0.5 percentage point increase in the target range should be considered at this meeting if economic and financial conditions evolved in line with expectations. We also stated that we were highly attentive to inflation risks and that we would be nimble in responding to incoming data and the evolving outlook. Since then, inflation has again surprised to the upside. Some indicators of inflation expectations have risen, and projections for inflation this year have been revised up notably. In response to these developments, the committee decided that a larger increase in the target range was warranted at today's meeting. This continues our approach of expeditiously moving our policy rate up to more normal levels, and it will help ensure that longer-term inflation expectations remain well anchored at 2%. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 3.4% at the end of this year, a percentage point and a half higher than projected in March, and 0.9 percentage point above the median estimate of its longer run value. The median projection rises further to 3.8% at the end of next year and declines to 3.4% in 2024, still above the median longer run value. Of course, these projections
wow,
do
with the
not
market.
represent a committee plan or decision, and no one knows with any
at that.
certainty where the economy will be a year or more from now. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing rate increases will be appropriate. The pace of those changes will continue to depend on the incoming data and the evolving outlook for the economy. Clearly, today's 75 basis point increase is an unusually large one, and I do not expect moves of this size to be common. From the perspective of today, either a 50 basis point or a 75 basis point increase seems most likely at our next meeting. We will, however, make our decisions meeting by meeting, and will continue to communicate our thinking as clearly as we can.
I'm a little surprised by this move, guys,
Our
to be
overarching
honest.
focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways.
We're
Inflation
back
has
to the
obviously
pre-market area.
surprise to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks and determined to take the measures necessary to restore price stability. The American economy is very strong and well positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All right, that was not a very
Thank you, Howard Schneider with Reuters.
confident
Two
speech.
related
Let's put it that way.
questions. Chair Powell, did you feel you boxed yourself in with the language you used at the last press conference on 50 basis point hikes in June and July? And would you please give us as detailed a sense you can of what role you played in reshaping market expectations so quickly on Monday?
So, as you know, we always aim to provide as much clarity as we can about our policy intentions, subject to the inherent uncertainty in the economic outlook, because we think monetary policy is more effective when market participants understand how policy will evolve, when they understand our objective function, our reaction function. And in the current highly unusual circumstances with inflation well above our goal, we think it's helpful to provide even more clarity than usual.
Wow, look
again,
at that.
subject to uncertainty in the outlook. So, and I think over the course of this year, financial markets have responded and have generally shown that they understand the path we're laying out. Of course, it remains data dependent, and so that's what we generally think about guidance, and that's why we offer it. And of course, when I offered that guidance at the last meeting, I did say that it was subject to the economy performing about in line with expectations. I also said that if the economy performed, if data came in worse than expected, then we would consider moving even more aggressively. So we got the CPI data and also some data on inflation expectations late last week, and we thought for a while, and we thought, well, this is the appropriate thing to do. So then the question is, what do you do? And do you wait 6 weeks to do it at the next meeting? And I think the answer is that's not where we are with this. So we decided we needed to go ahead, and so we did. And that's really how we made the decision.
Thanks for taking our question, Gina Smilik with the New York Times. I guess I wonder if you could describe for us a little bit how you're deciding how aggressive you need to be. So obviously 75 today, what did 75 achieve that 50 wouldn't have? And why not just go for a full percentage point at some point?
That's a really good question.
If you take a step back, what we're looking for is compelling evidence that inflationary pressures are abating and that inflation is moving back down. And we'd like to see that in the form of a series of declining monthly inflation readings. That's what we're looking for. And by this point, we had actually been expecting to see clear signs of at least inflation flattening out and ideally beginning to decline. We've said that we'd be data dependent, focused on incoming data, highly attentive to inflation risks, the things that I mentioned to Howard moments ago. So contrary to expectations, inflation again surprised to the upside. Some indicators of inflation expectations have risen, and projections of this year have moved up notably. So we thought that strong action was warranted at this meeting, and today we delivered that in the form of a 75 basis point rate hike, as I mentioned. So what was the point of it really is this. We've been moving rates up expeditiously to more normal levels. And over the course of the 7 months since we pivoted and began moving in this direction, we've seen financial conditions tighten, and appropriately so. But the federal funds rate, even after this move, is at 1.6%. So again, the committee is moving rates up expeditiously to more normal levels. And we came to the view that we'd like to do a little more front end loading on that. So I think that the SEP gives you the levels that people think are appropriate at given points in time. This was really about the speed with which you would get there. So as I mentioned, we 75 basis points today. I said the next meeting could well be about a decision between 50 and 75. That would put us at the end of the July meeting, in that range in that more normal range. And that's a desirable place to be because you begin to have more optionality there about the speed with which you would proceed going forward. Just talking about the SEP for a second.
Yeah, I can't wait to discuss this after.
Committee participants widely would like to see policy at a modestly restrictive level at the end of this year. And that's 6 months from now. And so much data and so much can happen. So remember how highly uncertain this is. But so that is generally a range of 3 to 3.5%. That's where people are. And that's what they want to see, knowing what they know now and understanding that we need to show resolve, but also be flexible to incoming data as we see it. If things are better, we don't need to do that much. And if they're not, then we either do that much or possibly even more. But in any case, it will be very data dependent. Then you're looking at next year, and what you're seeing is people see a bit more tightening in a range of maybe 3.5% to 4%. And that's generally what people see as the appropriate path for getting inflation under control and starting back down and then getting back down to 2%. So 75 basis points seem like the right thing to do at this meeting, and that's what we did.
Steve Leisman, CNBC. Thank you for taking my question, Mr. Chairman. You have not used the phrase in a long time, monetary policy is in a good place, which is a phrase that you used to use often. Now that the committee is projecting 4% or 3.8% next year in terms of the funds rate, which is similar to where the market is now, the futures market of 4% funds rate next year, do you think that's a level that is going to be sufficiently high enough to deal with and bring down the inflation problem? And just as a follow-up, could you break that apart for me? How much of that is restrictive and how much of that is a normal positive rate that ought to be embedded or not, in your opinion, in the funds rate? Thank you.
Sure. So the question really is, how high does the rate really need to go? And this is, the estimates on the committee are in that range of 3.5% to 4%. And how do you think about that? Well, you can think about the longer run neutral rate. You can compare it to that, and we think that's in the mid twos. You can look, frankly, at broader financial conditions. You can look at, asset prices. You can look at the effect they're having on the economy, rates, asset prices, credit spreads. All of those things go into that. You can also look at the yield curve and ask all along the yield curve, where is the policy rate? So for much of the yield curve now, real rates are positive. That's not true at the short end. At the short end of the yield curve in the early years, you don't have you have negative rates still. So that really is one data point. It's one part of financial conditions. So I think I have to look at it this way.
I don't really care about this question.
That
was a silly question.
And that affects the
so
economy. We have, of course, ways.
Don't want to talk over him
ways
though.
to think about it, but ultimately it comes.
I'll wait for the next question. So that question wasn't very useful. So at one point, the stock market was up almost 1.5% off the open, not off the low, off the open. You can see how correlated Bitcoin is. I am back to a 10-minute chart. Once again, we are proving that this chart has certainly played out exactly as expected. We did crash at the announcement. You can see the 430 mark. You know, I was looking at a 1-minute chart, and that might have screwed me up. On a 1-minute chart, it looked like this was a big enough correction. But now that you zoom out to a 10-minute chart, it's clear that on a 1-minute chart, it was probably, you know, gave the impression that this would be the low. On a 10-minute chart, you know, this did go right into 230 for like a 30-minute correction. And now we are rising. We made a new swing high. So this 10-year-old paper that published these results of what happens in a stock market the day of the announcement so far has actually played out pretty well. Let's see, is there any other good questions?
I think that the neutral rate is pretty low these days. So I would think it would, but you know what? We're gonna find that out empirically. We're not going to be completely model driven about this. We're going to be looking at this, keeping our eyes open and reacting to incoming data, both on financial conditions and on what's happening in the economy.
Thanks. Nick Timmeros of the Wall Street Journal. Chair Powell, you've said that you like your policy to work through expectations, and now obviously this decision was something quite different from how you and almost all of your colleagues had set those expectations during the intermeeting period. And I know you just said that what changed was really the inflation data, the inflation expectations data, but I'm wondering on the inflation expectations data, was there something you saw that was unsettling enough to risk eroding the credibility of your verbal guidance by doing something so different from what you had socialized before?
So if you look at it, when you look at it,
All right, that's a bad question. It's a silly question. Your expectation always changes. The same thing I say about the market. Like my view on the market, on the stock market changes every time the price changes. So every time a piece of inflation data changes, they're allowed to change their mind. This is that silly expectation that anything Jerome Powell said 10 years ago has to somehow hold right now. And of course it doesn't. Wall Street Journal should do better than that. They should ask better questions. So this is interesting. So again, we're going to go off of this graph, which we've been covering the whole time, and we reach a high up before 3 p.m. Eastern. So this is 2:30 Eastern. This is 3 p.m. Eastern. And then right here, we have 3:30 Eastern. And then we close approximately where we were right as the announcement came. So according to this, we should fall back to where we were at announcement. So we'll see where we close. Maybe I'll hang in there for like another hour. But realistically speaking, the market should close in the vicinity of this line. I would say somewhere over here. So the market should close somewhere here. I'll make it green. And that would be a 0.5% rise on the day, which is statistical average on days like this. Like I said, I'm a little surprised that we rallied this much. I didn't hear anything that should give confidence to the stock market, but we can talk about some of the other potential reasons as to why the market was so giddy up after what he said. Oh, new question.
Chair Powell, Neil Irwin from Axios. Thanks for taking our questions. The late-breaking kind of decision to go to 75 basis points, do you worry that that will make policy guidance a less effective tool in the future? And should we think of that as a kind of symmetrical reaction function if we start to get soft readings on inflation or if the labor market starts to roll over?
To take your second question first, yes. I mean, I think we're resolved to take this on, but we're going to be flexible in the implementation of it. Sorry, and your question was guidance. So again, the overall.
It's a better question.
We try to provide as much clarity about our policy intentions as we can, because we think that makes monetary policy work better. There's always a trade-off because you have to live with that guidance, and so you do it, and it helps a lot of the time. I frankly think this year has been a demonstration of how well it can work. With us having really just done a very little in the way of raising interest rates, financial conditions have tightened quite significantly through the expectations channel, as we've made it clear what our plans are. So I think that's been a very healthy thing to be happening. So, and I would hope that it's always going to be any guidance that we give is always going to be subject to things working out about as we expect. And in this particular situation, we're looking for something specific, and that is progress on inflation. We want to see progress. We want to see inflation can't go down until it flattens out, and that's what we're looking to see. And if we don't see that, then that's the kind of thing that will cause, even if we don't see progress for a longer period, that could cause us to react. But we will soon enough. We will be seeing some progress at some point, and we'll react appropriately to that too. But I would like to think though that our guidance is still credible, but it's always going to be conditional on what happens. This is an unusual situation to get some data late during blackout, very close to our meeting. Very unusual to one that would actually change the outcome. So I've only seen in my 10 years plus here at the Fed, I've only seen something like that, even close to that, 1 or 2 times. So I don't think it's something that'll come up a great deal.
Thank you so much for taking our questions. Colby Smith with the Financial Times. On the clear and convincing threshold for the inflation trajectory, what is the level of realized inflation that meets that criteria? And how is the committee thinking about the potential trade-off of much higher unemployment than even what's forecasted in the SEP if inflation is not moderating, at this acceptable pace?
So the second part I didn't get.
What's the potential trade-off with higher unemployment than even what's forecasted in the SEP if inflation is not moderating at an acceptable pace?
Right. So what we want to see is a series.
We're gonna cut this off in 5 minutes. I'm only gonna watch this 5 minutes more.
Inflation.
After that, I don't think there's anything more to learn.
Inflation headed down. So, but and right now our policy rate is well below neutral, right? So, soon enough we'll have our policy rate. Let's assume the world works about like the SEP says. The policy rate will be up where we think it should be, and then the question would be, do you slow down? Does it make you'll be making these judgments about, is it appropriate now to slow down from 50 to 25, let's say, or speed up? So that's the kind of thinking we'll be doing, and we're looking. Ultimately, we're not going to declare victory until we see a series of these, really see convincing evidence, compelling evidence that inflation is coming down, and that's what I mean by that's what it would take for us to say, okay, we think this job is done, because we saw last year inflation came down over the course of the summer and then turned right around and went back up. So I think we're going to be careful about declaring victory. But again, the implementation of our policy is going to be flexible and sensitive to incoming data.
Are you more concerned now that to bring down inflation, it's going to require more than just some pain at this point?
So again, I think that I do think that their objective, and this is what's reflected in the SEP, but our objective really is to bring inflation down to 2% while the labor market remains strong. I think that what's becoming more clear is that many factors that we don't control are going to play a very significant role in deciding whether that's possible or not. And there I'm thinking, of course, of commodity prices, the war in Ukraine, supply chain, things like that, where we really can't the monetary policy stance doesn't affect those things. So, but having said that, there is a path. There's a path for us to get there. It's not getting easier. It's getting more challenging because of these external forces, and that
I like that Bitcoin is holding up okay
to move demand down.
considering this.
And you have a lot of surplus demand in take for example in the labor market. So you have two job vacancies essentially for every person actively seeking a job, and that has led to a real imbalance in wage negotiating. You could get to a place where that ratio was at a more normal level, and you would expect to see those wage pressures move back down to a level where people are still getting healthy wage increases, real wage increases, but at a level that's consistent with 2% inflation. So that's a possibility. And you could say the same thing about some of the product markets where there's just excess capacity, and where the strong demand has gone into where they're capacity constrained, right? So effectively what we think of as a vertical supply curve or close to it. So demand comes in and it's very strong, and it shows up in higher prices, not higher quantities, not more cars, because they can't make the cars because they don't have the semiconductors. So in principle, that could work in reverse. When demand comes down, you could see, and it's not guaranteed, but you could see prices coming down more than the typical economic relationships that you see in the textbooks would suggest, because of the unusual situation we're in on the supply side. So there's a pathway there.
All right, guys, I think I'm done with this. We've heard enough. So it's super interesting. I did not hear anything there that should cause the market to rise. So why did the market rise? Well, probably because in this case, normally you buy the rumor, sell the news, but every time there is a Fed call, you sell the rumor and you buy the news, because you always think it can be worse, and it's never worse because they do care about the stock market. So we have 1 hour to go before market closes. It is very, very likely that this will literally play out in real time. We will end the day at approximately 0.3 to 0.4% update, because right here, if I draw this line across as straight as I can, you will see how this is at approximately 0.5% above zero, but it doesn't start at zero. It starts at about 0.25 or 0.2%. So this here rise is approximately a 0.3% rise in the market. Okay. It's approximately a 0.3% rise in the market on this day, on average, over time. So let's see if we beat the 0.3% rise in the market today. This line here is approximately 0.3%. The purple, so the blue is yesterday's open. And I'm keeping yesterday's open in mind as well. The blue is where the market opened yesterday, not today. And going back to this historical chart, the market tends to rise 0.5% over the 2-day period of prior day and the announcement day. And the day after, it tends to be pretty flat. So insignificant. I mean, they have it here. It's great to know, but it's insignificant. So we're looking at approximately 0.5 percentage point rise in the stock market across 2 days. And the majority of that is on the second day. Let's see what's going on with 1 hour to go. We are currently on the day up 0.3%. You can see it right there in the corner. We were up 0.3% a second ago. And if we count yesterday, we're up a little bit more. So let's see where we actually close on the day. I want to stay with you another hour. We have 1,300 live viewers. I don't know. I mean, people are asking me to translate all that into Russian. I don't know if I want to, bore 1,200 people on the stream for the 50 people or so that couldn't understand what Jerome Powell had to say. There was a question, do I like Jerome Powell? I like Jerome Powell a lot more than Janet Yellen or Ben Bernanke. I like him a lot more than those people. So of the Fed chairmen that we could have, Jerome Powell is not a bad choice. There's a lot of Russian comments, Russian language comments. Now you have to be more specific. All right, we can just watch the market. Bitcoin is up. Let's take a look at a Bitcoin chart on a higher level time frame. I would love to see this go into an MRI buy, but at the same time, I do have a 20% bullish allocation that is at approximately break even. I am still leaning bullish here. It's hard for me to explain why the markets have gone up. I'm not really sure why the market's gone up. To me, this was not very bearish news. But I guess since the market took a bit of a nosedive yesterday, well, not yesterday, but a couple of days earlier, I've been looking for the markets to bottom sometime this summer. We are approaching this bottom of this upwards channel. Lots of reasons for the markets to start rallying here. I am bullish on Bitcoin, guys, right now at the moment. Until 20,000 breaks, I have to assume the low is in. That's a big round number. I like big round numbers. So many people are now expecting a collapse that I remain bullish, but I will go back into cash on that position if need be. This is the Bitcoin 1 hour chart. Drop those things, they're just in the way. Not much to say on the 1 hour chart, really. GBC premium slightly went up today. That's a good sign, at least. Oil is pulling back on the MRI warning. I really thought oil would pop a little bit more before a pullback and then a rise, but as you guys know, I'm more bullish oil than bearish. I don't understand how I can possibly be popular in Ukraine. My opinions on the conflict from the beginning have not exactly made me popular in Ukraine. Though my views have always been to save the maximum number of Ukrainian lives. It's just that I disagree with people on how that is to be achieved. Yes, the yearly chart is on an MRI sell. I am very aware of that. It's not been a good year for Bitcoin. Yeah, I have a significant number of Russian speakers here. I am half Ukrainian, guys. Just so you know, before you throw too much hate my way. I was born in a part of Russia between Kiev and Moscow. They're not that far apart, considering how big Russia is. And it wasn't Russia back then, it was Soviet Union. And when I left, it was still Soviet Union. So it was all one country. All right, back to the markets. I think the market will close at or above this green line. This green line is currently sitting at 3,790 points on the S&P. It represents a 0.3% rise on the daily chart. Anything above that only proves how accurate this paper was, written all the way back in 2013. You can check out the paper by looking at the tweet by the Financial Summit. Right here, it has the link to the paper. Check out the paper. Please follow the Financial Summit so that it can finally get 1,000 Twitter followers. Hey, Wangold, how are you, brother? Tone, in March 2022, you allocated 20% to a bearish trade and recently removed it. On March 2022. March was back there. No, I didn't. It couldn't have been. I might have talked about it, but I wish I did. At any, I wish I did. In March, I was either cash or long. I wish I had. Would have been nice. But I'm pretty sure I did not. I mean, I'm not going to go through my March streams, but I don't believe that I have. I don't remember deleting that. I was avoiding going short this whole time. I finally threw in the towel a little late, but should have done it back here. All signs were there. I do like spicy food, as long as I can still taste my food. No, I didn't miss. I just didn't see it as a bullish sentence. To be nimble in incoming future data. I mean, that's literally the Fed's job. That's not a bullish statement. That's their job. But basically saying 75 basis points is high and shouldn't be common. That's also known. Like, they've never raised it that much. Well, like, these are common sense things. Those are not bullish statements. Man, imagine if he did raise it only 50 basis points, the S&P would be up like 5% today. So would Bitcoin too, probably 10%. Yep, we're above the Mendoza line here. Man, I kind of want to see where it closes on a live stream, but I also don't want to sit here for 15 minutes. Unless I maybe have some guests and someone to talk to. How many days are left in the 4-day candle? We have 2 days to go. Basically the end of the week, Thursday, Friday. No, I mean, in order for the 4-day chart to actually be bullish, we need to get above $30,000. Like, it's not even close. Like, it's really not close to being bullish. It's only a bullish allocation because it has fallen like the furthest against its long-term moving average, potentially in like 5 years. But this is certainly not a bullish looking chart. I don't really pay attention to the amount of longs and shorts on Bitfinex. I really don't like cooking my own ribeyes. I like ordering ribeyes from a good restaurant. I cook other stuff. I'll grill a steak every now and then, but I don't really cook steak that often. I don't have the right kitchen equipment for steaks almost ever. You know, the right grill. He said they chose to raise it 75 basis points now to be better positioned on next meeting where they can raise by lower. I don't know. The Fed might get lucky. I think they're trying to just get lucky with this inflation thing. They want to raise it like a bunch now. And then if Ukraine negotiates peace with Russia, which they could have done at any point in the last 8 years, that's what I kept saying, though I haven't been saying it for 8 years. I've only been saying it for the last 5 months. But if that peace is negotiated, which should have been done before the war, then the potential supply chain can come back up. But considering how Russia just cut 25% of gas to Europe, Europe is being total idiots. So I don't see this inflation thing ending. I really don't. But the Fed can do nothing about it. Well, the USA is not letting Ukrainians in. It's a Europe problem. The US talks about it, but they're not actually letting Ukrainians in. They're letting anyone in that's from Latin America. But officially, the US is not letting Ukrainians in, not like the other countries. They can get in only with like a citizen vouching for them in some kind of weird way. So the US starts a problem and then lets Europe deal with it. Good job, US. Oh, Magellan, the Kazakhstani billionaire guy, he's awesome. Such a nice guy. Such an incredible businessman. Like, I can't do that stuff. Like, I do not have the patience and the charisma that these people have. Oh yeah, Boris Johnson is responsible for so many Ukrainians getting killed. It's unfortunate they didn't vote him out. It really is. No, it's not possible to negotiate with someone whose aim is to kill you. That is not possible at all. But your assumption is inaccurate. If your assumption was accurate, that would be an accurate statement. All right, let's go back to the chart. The market handled this very well. 75% rate hike. No one expected 75% a few weeks ago. Yesterday, everyone expected it, and the market handled it reasonably well. What do you expect Bitcoin to do in a high inflation environment? Bitcoin doesn't care. We've never really seen it. This is not, it doesn't matter. Bitcoin moves based on speculation. Bitcoin moves based on speculation. Whether inflation is 1% or 8% in a single year is irrelevant. Bitcoin moves, 100% in a year. Like who cares if the inflation rate is 1% or 8%? It's completely irrelevant. Well, we have to wait at least another day for this news to kind of get absorbed by the market. When will we be valuing Bitcoin in rubles instead of dollars? Probably never. Guys, the dollar isn't going anywhere. The dollar, have you not seen what the dollar did today? No, it's the Ethereum scam. The dollar is at a 10-year. The dollar is at a 20-year high. 20-year high. That's the dollar. It's not going anywhere. Dollar is only getting stronger. So Bitcoin is not a hedge. Bitcoin is not a hedge against inflation. It's a generational hedge against inflation. It's a hedge against inflation on a 20, 30-year basis, but you don't buy Bitcoin because of inflation. You buy Bitcoin for its incredible properties of unconfiscatability, censorship resistance, the fact that it's a finite supply, the fact that the world may use it as a future world reserve currency. But I never bought Bitcoin as a hedge against inflation. I buy it as a hedge against government policy and government stupidity. And one of 100 stupidities that the government does is inflate the money supply. But saying that you bought Bitcoin because of inflation is like demeaning to Bitcoin, to be honest with you, because a 1 or a 2 years worth of inflation is irrelevant to the price of Bitcoin as it moves around. Yeah, government stupidity divided by 21 million, correct. Yeah, if you're in Argentina, if you're in Turkey, if you're in Ukraine, yes, you buy Bitcoin because of the inflation. I know the Ukrainian currency, the hryvnia, on TradingView it's been pegged, but in reality, on the ground, there's no way you'll be able to get $1 for 30 hryvnia. I can't imagine that. My best guess is that it's above 40, if not close to 50. Yeah, if you're in certain countries right now, hell yeah, you buy Bitcoin for inflation, but not in the US. Not in the US, maybe in Japan, because the Japanese yen's devaluing like crazy, maybe even in Europe. But even in Europe, right? Like the euro is crashing like crazy against the dollar. So we can say, since June, the euro is down 15%. That's borderline reason to buy Bitcoin against inflation, because the US price inflation is up by what, 8% annualized? Europe's price inflation is probably up more than 8% annualized. Plus, they've devalued against the dollar 15% in the last year. So if you're in Europe, inflation is a much bigger reason to buy Bitcoin. But even then, the reason to buy Bitcoin as a European is that I think the euro is going to break up. And now if you're in Germany, you might be okay. It depends how much gas Russia will give you. But if you're in other countries like Greece and Italy, if they leave the European common currency, their currency is going to go to shit. It's going to devalue like 50-60% instantly. So yeah, if you're in certain countries, you buy Bitcoin for its inflation hedge. But in the US, not really. Canada, surprisingly, Canadian currency has been doing well. Really? The Ukrainian currency is only 35 hryvnia to the US dollar? I'm very surprised. I am very, very surprised. I thought it would be significantly cheaper. So that's good for you guys. I would have assumed that it's way worse on the black market exchange rate. I'll check out my May 27th stream and see what's going on over there. I'll need to make a note. See, May 27, not March. See, that's the issue. Oh no! Use the very same tag. Oh yeah. No, I need the dates. Like, I'm not gonna go searching through my March. I stream every day. I'm not gonna go searching through that. Wouldn't a new wave of lockdowns and printer go burr? I can't even say that right. Push Bitcoin to 100K though? No, not necessarily. Not necessarily. Another wave of lockdowns and people are going to be, selling body parts to buy food. I mean, most people will sell the Bitcoin before a body part. Depends how hard of a diehard of a Bitcoiner you are. All right, back to the S&P chart. Man, whoa, look at that. Look at that. We are rallying. Hourly chart, let's look volume. Oh, wow, look at the last hour. Well, the last hour was the Fed hour, yeah. This was the 2 p.m. hour. This is the 3 p.m. hour. The 3 p.m. is, we're only 30 minutes away from market close. It would be super interesting if we actually close today more than 0.5% up, because from yesterday's open to today's close, it's projected we should make 0.5%. So it would be super interesting if we can make more than 0.5%, because you saw this play out in real time. You saw a 30-minute drop in price following the announcement, then a huge rally, and then a pullback into the close. That's exactly what we saw today. I think a 5-minute chart will probably show it the best. Here's the 2 p.m. candle. Nope, sorry. Yeah, 155. That's right, 155. Here's the 2 p.m. open. We kind of rallied into the announcement. We then crashed for 30 minutes, made a low at exactly 430. At exactly 430, we make the low, then rally to a new swing high right there. And now we pulled back, and now we're challenging that high at the end. Like, it's absolutely incredible how I've been talking about this exact same thing playing out for the last couple of days. I always forget about this chart. I always talk about it like the day after the announcement, like it's beneficial to anyone. This time, I was all over this chart before the announcement, and I can't believe how perfectly it played out. We rallied into the announcement. We immediately crashed for 30 minutes. At exactly 4:30, we found a low. We rallied over the next 30 minutes. And now we're pulling back into the close, but it looks like we are rallying at the close. And now let's take a look and see where we are on this trading day. Oh no, that's on the candle, not on the trading day. So on the trading day, we are currently up over 1%. So we're crushing it. We've doubled the 0.5% expectation. And if you factor in the prior day, we are up 1.5%. Look at that. Instead of 0.5% on average in 2 days, though yesterday didn't do much. Yesterday was a very small gain. Yesterday's open into today's open was a very small gain. But that chart is based in bullish conditions. What chart? This chart? No. This is a 20-year history. It's a 20-year average on the Fed rate announcement day. So this is from 1994 to 2013, 20 years. So it covers the, the .com bear market, and it covers the financial crash. So it's both bull and bear markets. Bob Law, I would love to tell the people that died at Mariupol and Bucha that Ukraine should have negotiated with Russia prior to February 24th and not listen to what America kept telling them to do. And I can't tell it to those people because a lot of them have died. I'm trying to tell people to avoid getting killed, but those that prefer to go pick up an AK and shoot it out with the Russian military, it's on them instead of actually negotiating and signing some peace agreements. I see. This is why I need a political stream. This is why we need a political stream. I mean, I'm sure Canadians may want to be part of China, but unfortunately, they're right next to the US border, and America ain't exactly going to let Canada be part of China. Like, Ukraine is in an unfortunate geographic position, and they don't have to be part of Russia, but you have to be like friends with your neighbors. Otherwise, your neighbors will come in shooting on a geopolitical scale. So unless you can find a way to take the country of Ukraine and put it somewhere in the Pacific Ocean, where you're not bordering Russia, you'll be able to say the statement of what can be achieved. Well, because if you think Russia is a dictatorship, it should be a lot easier to negotiate with a dictatorship, because in a dictatorship, you only have to negotiate with one person. Imagine negotiating with the United States. Who do you negotiate with? Sure as hell ain't going to be Biden. And if you are going to negotiate, the first thing you need to do is to keep anyone with an American passport or a British passport out of that negotiation. German probably too. Wow, look at the markets. No, I'm not saying a dictatorship is better, but if you're going to negotiate with a dictatorship, you know exactly who you need to negotiate with. How do you negotiate with a democracy? Who do you negotiate with? I'm happy to hear the answer. No one can negotiate with the US. It's actually impossible. Why is the dollar going up? Well, the dollar is going up because the rest of the world is going to shit, especially Europe, especially in Europe. So people are running to the safety of the US dollar. People still believe in the US government, and they are willing to buy US bonds still, even today. All right, we got 20 minutes left. I mean, there's going to be a pullback into the end of day, but I don't think we're going this low. This turned out to be an amazing day for the stock market. Look, I expected 50 basis points. I was wrong, but I also expected a rally in the stock market, and I was right. Even at 75, I thought the market would be okay. It would survive. And I trusted the numbers. I trusted the data. I trusted the history, this 20-year historical average, and I trusted what I've seen over the next 10 years of how market behaved. on the FOMC day. And here we are witnessing it in real time of what happens. I think we're going to pull back into market close. I think this is going to be the high for the day. If I was trading this, which I would not have been because it's too stressful, I would have probably held over the last 2 days, but I wouldn't have been actively trading. I mean, this is where I would exit. I would take my exit now. I wouldn't wait till the end of day. This was a great run up after the 30-minute correction, and then we go from there. Ron B, thank you for staying and being a supporter. I hope we don't pull all the way back to the green line. I hope we stay in the zone. But let's see what happens. Either way, it's been a good day. It's been a good day. Bitcoin is back to 22,000, more or less. Oh, I see what you mean, Emma. Instead of copying, I moved it. Oh, okay. All right. Yeah, I'll take a look at that. That was by accident, obviously. All right, May 27, 540. All right, I'll make a note. If I had a pen. All right, I'm gonna remember that. May 27, 540. All right, I'm closing this stream in exactly 20 minutes. I'm really curious where we close because we can still pull all the way back and close red, which would be insane. How likely do you think it is that the long-term low is in? I would give this about a 55% chance that the long-term low is in. I really do believe that we bottomed. I really do. But I'll be proven wrong if next week we're trading back close to 20K. We almost breached it, right? What was the low? $20,076. Well, the plunge protection team, of course, it's a real thing. The Fed has a mandate, full employment. And the best way to create full employment is to make sure the stocks of those companies don't implode so that people don't get fired. So it's just common. All right, let's see. Let's get back to the chart. Oh, not good. Not good. Anyone going to step up and buy last minute? Well, Bitcoin is holding up okay. I really do want to see this close higher than this green line. The green line is 0.3% up. That is the statistical average of where we should close today. But I would like to see it close all the way at 0.5 or above. So if I got a good question in my Telegram group. If I believe this is a Bitcoin bottom, do I also believe this is the stock market bottom? Not necessarily. I still think the market can take a nosedive, but Bitcoin can hold off this low because Bitcoin doesn't have to decouple. It just has to have a different beta to the stock market. So it can still be correlated with the market. Like right now, look at the last two 10-minute candles. The stock market fell a lot in the last two 10-minute candles. Bitcoin only fell a little in the last two 10-minute candles. So it's possible that the stock market does make a new low, but Bitcoin finds a way to avoid it, especially if we rally over the next few weeks. And the Bitcoin rallies up to 30, and the stock market rallies a little bit, and then Bitcoin only falls to 25, while the stock market makes a new low. Oh, these are 5-minute candles, not 10-minute candles. Oh, sorry. Bitcoin is a 10-minute candle. Stocks are a 5-minute candle. That's not good. That's a mismatch. Yeah, see, now they're at least the same shape in the candles, but clearly the S&P is down way more than the stock market. The S&P is down way more than Bitcoin is. Uh, 10-year yield. Yeah, let's go take a look at 10-year yield. US 10-year yield is rising, but it is also on a monthly MRI top. Interesting. See, look at the last time there was a monthly MRI top. The yield pulled back for 4 months. Now this is the next MRI top. And let's see if we're going to pull back a little bit. Let's see if this is the top in the 10-year yield for now. If we zoom out, we've been here before. 10-year yield has broken critical support before. Sorry, critical resistance before. Yeah, it's hard to draw a good trend line here. This is really bad for the 10-year yield. Well, bad, good, it's all relative. I don't know if you want it to go down or up. We have broken the prior swing high. That is very significant. We have officially broken the prior swing high. That has not happened before. You can say that we broke it here, but that looks more like a horizontal channel. And then we broke down and we finally broke up. This is going to be a problem for the US government. The yield is going to go up. No, the 10-year yield is going to rise. It's over. The bond yields are going to be rising. There's going to be demand for that yield, but not too much demand. There is a loss of faith in government. There is a loss of faith in government. Yields will have to rise. That would implode the national debt. The US gets into serious trouble, but Europe is in bigger trouble. All right, I think we will hold this green line going into market close. We got 12 minutes to go. I think we will hold it. I think we will close somewhere at the top of this candle, somewhere around 3,810. That's where I think we will close today. That's just my opinion. I'm not trading this opinion, just a guess. All right, guys, can we, I know I get into the Russia-Ukraine thing sometimes, where I do try to be as respectful as possible. So please be respectful, especially when you're talking to people from countries that have active soldiers killing their people. Anything interesting from the ECB? Not really. Oh man, the last candle ended really nicely, and then boom, we're tanking. That kind of sucks, but it still plays this game. You know, we rise into the announcement, we pull back after the announcement, we rise to new highs after the announcement, only to fall into end of day. So talk about it playing out perfectly. All right, 9 minutes. All right, we still got 900 people watching. Hey guys, please check out the financial summit taking place in the Dominican Republic. Rented this entire castle where we can talk trading, investing, other ways to make money in this environment. You can follow us on Twitter, where I've been focusing on this tweet all day. Follow Financial Summit on Twitter @FinSummit. Also Instagram and our YouTube channel. Trying to get all of these social media to 1,000 subscribers and followers. Oh boy, we're really pulling back, huh? Yeah, that's kind of unfortunate. Traders tend to sell and just leave for the day. I think if anyone was short, they already exited. So the only people exiting now are those that were long. As I said earlier, I did not see anything bullish in Powell's statement. I don't know what's going to cause the markets to go up the rest of the week. To me, the 0.75 basis rate hike and his statements were not bullish at all for the stock market. It doesn't mean that the stock market can't rise on its own merits in spite of the high interest rate or the rise in interest rate, and I've been one of the biggest champions of the stock market and expecting it to rise even with the rising interest rate. But having said that, I didn't hear anything from Powell that created a confidence to the tune of a 3% move in a single day in the middle of the day. I didn't hear anything that caused this run up. I didn't. Maybe I should talk to Mark Moss again. Maybe he heard something, but I didn't hear anything bullish in his statements at all. I really don't think Bitcoin has much further to go down. The only reason Bitcoin would have further to go down is bad risk management, bad allocations, bad borrowing off of your Bitcoin. So at this point, Bitcoin going down just means that Bitcoin is leaving irresponsible hands into responsible hands. But I don't see a structural reason for it to go down much further. We're at my bear market support. Now it's all about who's going to get liquidated. The ECB is preparing to pump money to save the Eurozone. Yes, which is why the euro is only going to devalue more against the dollar, which is why the Europeans are going to send their capital to the United States. Also, as I've been expecting, Ukraine is going to go to the negotiating table. They're going to give up a shit ton of land to Russia. Russia is going to come out looking like a winner in this. And Europeans are going to be scared shitless that Putin is now going to move the tanks into Spain and Germany and the UK, and they're going to pool their money, they're going to pool their capital, and they're going to move it into the United States because he can't roll his tanks down, Fifth Avenue in Manhattan. It's geographically impossible. But the Europeans have been convinced that if Ukraine doesn't win, then Putin takes all of Europe. And because they've been convinced of this stupidity, which I do not believe in, they will take their capital and flee, which is why the news continues to tell them how Ukraine's winning and how Ukraine's going to win. You have to think about this from a financial perspective. And from a financial perspective, there's so much bullshit propaganda on both sides, you gotta, sift through it. The Russian propaganda does not affect you financially, but the Western propaganda affects you financially greatly. So if you know what the Western propaganda is, you can adjust financially for it and be ready for it. And this is why I think the United States will still benefit from capital flight from Europe to the United States, mostly on fear of Russia. And this fear is very strong, very strong. All right, we got 4 minutes. We are above the green line. I think we're going to close above the green line. 4 minutes. No, I didn't say Russia is invading Europe. I think it's a stupid view that Russia is going to invade Europe. But half of Europe believes that if Ukraine doesn't win, Russia is going to invade Europe. Just like most Ukrainians believe that if they go to the negotiating table and surrender some land, then Putin is going to kill all Ukrainians. Again, these are fears that have been drilled into the minds of the Europeans. And if you have that fear, then you're going to act on that fear. I never said there is no way they're going to invade Ukraine. I don't remember ever saying that. And it doesn't matter. They did. I didn't speak my public opinion on the matter. So there's no way you're going to find me saying that they weren't going to invade Ukraine. It's impossible because I wasn't paying enough attention to the situation. All I've been doing now is paying attention to the situation because it matters on so many levels. All right, 1 minute to go. Let's see where we close. That green line's been there for the last hour. That's where the market statistically should close today. It's been there for more than an hour. Come on, one more uptick. Uptick. Damn it, it's going to close below. It's going to close below. Yeah, there's always selling in the last minute. Oh, I got the uptick. Oh, how about that? Look at that. Look at that. We closed just above that green line. The official close right there. So how did we do on the day and on the 2 days? We were up 0.67% over a 2-day window. That slightly beats the expectation of a 0.5% upswing. We were at 0.67, so we were a little bit up here. We slightly beat it across both days, and we did very well on the day itself. Because yesterday was not a great day. We underperformed yesterday, we overperformed today, and we overperformed over the 2-day period. All right, good stream, guys. Very good stream. Thank you all for joining. And I want to do this the next FOMC meeting. That would be at the end of July. I'm not sure where I will be then, but we'll definitely need to do this again. All right, please follow, please like, please subscribe, and follow the Financial Summit. Our event is 6 weeks away, and I will see you all on the next one, guys. All right, where is my... Waiting for the Zoom control thing. It like disappeared. Oh no, there it is. It's hiding. Bye, guys. Wearing the Bull Bitcoin shirt. Shout out Francis Poulier. Bye, guys. Thanks for joining. Am I having problem again? Stopping the stream? No.